The number one piece of advice I can give any first-time home buyer is go to Zillow, work with their lender, work with their agent.
Oh my gosh.
Isn't that what you told me they needed to do?
That is not what I said.
Okay, maybe it was Quicken or Rocket.
Maybe Mr. Cooper. I don't know. Maybe.
I'm here. My name's Darin Hunter. I am here with Melissa Bailey, Remax Town & Country out of Canton, Georgia, and that's in Cherokee, Georgia. Melissa, I reached out to you not too long ago when you expressed some frustration with, I think it was your son, that maybe saw an ad or saw something out there and wasn't really able to come to fruition. Kind of give us a little bit of background. Why are we talking here today?
Well, it was great because the good news was rates were coming down, right? So on social media, every time you turned around, somebody was promoting the rate was this, the rate was that. And I'm trying to help my son. I'm the expert, right? Trying to help him navigate through all this. And what ends up happening is he's asking me, why can't I get this rate? And every time I turn around, I'm explaining this process to him. And it made me just realize it's frustrating sometimes what you see on social media, right? It's not always the facts. And that a lot of my clients and other people out there don't understand the process. Right. So, yeah, you saw that post and took off from it.
And here we are.
That's right.
Here we are. So it's like one of those things, I think as my grandfather always said, believe half of what you read and nothing that you hear. And I think we can probably apply that to social media these days. But there is some good information out here today on the social media, on all the different platforms. And today we're going to talk a little bit about what are some of the questions you should be asking your mortgage lender, your real estate agent, and just hopefully we can shed some light because truth be told, we haven't worked together at all.
We have not.
Yeah.
We have not.
So we've seen each other in the community, but haven't actually had the opportunity yet to work with you.
Correct. I think our favorite place is Pie Bar.
That was a secret. And we're not supposed to tell anybody that.
Oh, well. Yeah, I think the communication part is really critical from a real estate agent because we're the ones who are saying, do you have a lender yet? Yeah. Right? And we may be providing referrals, 2 or 3, maybe there's 4, but we have to assess our client. And sometimes it's like, how much does the client know and in what direction do I need to send them? Yeah. And how do they determine which one to work with is really important.
And what do you tell them? I mean, what are some of the things that they need to be looking for when they choose a lender?
One of the first things I ask them to do is to ask about the programs that are being offered by that particular lender because there are so many out there. Right. And some of them need down payment assistance. And I can't possibly keep up with all those, right? Sure. The realtor needs to stay in their lane, so to speak. And so that's why I think they need to find the expert that works for them. Right. So find out what kind of programs are involved.
There are tons of programs that are out there. You've got your conventional, you've got your FHA, your VA, your USDA, then you've got your hard money, your non-QM. I mean, the list goes on. And to your point, if you're not working in it on a daily basis, there's no way for you to be able to tell your client what the best program is. And not only that, have you run their credit? Have you looked at their income documentation? Right. So I think it's I hesitate to tell agents to stay in their lane because I know they're trying to help, their clients, are trying to put them in the best position possible. But I think you do need to lean on the expert in those particular scenarios. And I've been in real estate and mortgages for over 20 years, and there is not a day that goes by that I still don't learn something. There's some sort of new program. There's some sort of new tweak to that program, a new guideline change. I mean, it's constantly fluid. So, depending upon an expert, I think is to me the right advice for sure.
Absolutely. I think what we can do is kind of tee them up, right? Explain to them, these are some things you can ask the lender, but be ready to really lean in because you're going to need so many documents to get that process started. Right. And I like to tell them that if you can be like super focused the first 48 hours and get everything you can to that lender, then not that you're done with them, but that's the biggest hurdle to get through.
Yeah, daily we're we're chasing down documents from a borrower, and it's it'll be 10 bank statements or 10 pages of one bank statement, and for whatever reason 1 page is missing, but I've got to have all 10 of those pages in order to make it an official legal document. And the underwriters, they will kick that loan right back out if we even let it get back into underwriting. So,
Right.
so yeah, I think having, setting the precedent, right out of the gate and making certain that they understand or setting the expectations rather is probably the better way to describe that. And making certain that they understand that you got to have some urgency. You got to get on it right away. You got to make certain that you're paying attention and doing what the lender says. And I would imagine you'd be willing to help in any form or fashion too.
Absolutely. I have, because I've had clients that don't even know how to download the statement off their bank account, right? And maybe somebody young who hasn't really, they're checking their banking account online.
Right.
They don't even know they can pull a statement.
Yeah.
So, and that's just part of the communication process. And that's something
Right.
that we all talk about in the real estate industry, is that you've got to be able to communicate.
Yeah.
And for example, I may send you a client that travels a lot or works a crazy schedule, and I need to help you know that, hey, this gal's a nurse. She works the 11 to 11 shift. You're not going to hear from her during certain time points, and that can alleviate a lot of issues, is setting up communication.
Yeah, I mean, and there's multiple ways to go about that. I mean, it's obvious, but if you send out a comprehensive list of the documents that are needed, that gives the individual a starting point, and then you can follow up via text, via phone calls, but they'll have that checklist right up in front. And then I have no problems even including the real estate agent, realtor on the transaction, or on a lot of the correspondence I have with the agent, with the borrower. If they're okay with it, I have no problems doing that, because again, like we talked about it earlier, it's a team effort.
Yes. And we can facilitate some of that.
Right.
Absolutely. Absolutely. I think, sometimes it's the realtor needs to sit down with their client and help them get that information and be able to provide it. And let's face it too, we have a lot of senior citizens out there that it's very important that they feel comfortable sitting down and they want the paper. So sometimes I have to print the paper out for them and take it to them and review it with them and have those conversations. Absolutely.
Yeah, and I think it's you need to be flexible from the borrower or from the lender standpoint, right? So if I'm dealing with somebody who's a first-time home buyer and is very tech savvy, it's going to probably make things easy.
Yeah.
But having the ability for them to walk into the office and say, hey, here, let me help you download your statement. Let me print this out for you to sign that documentation. Right. I think that's, certainly there's plenty of advantages of working with a local lender, but that definitely is one of them, because we have people come in this office all the time to try to help them expedite their document collection.
Local lenders are absolutely key. As a real estate agent, it is very difficult from the standpoint, and I'm going to say it, if you're working with Zillow, like you said, or you're working with a Rocket. A lot of those people are working 9 to 5,
right,
or they're in California. So you're dealing with time differences and trying to, when time is of the essence, get that information can be very difficult.
What about weekends?
I honestly, I would say I communicate with the lenders when I have an active transaction happening. A lot of times it is Friday after 5 or Saturday or Sunday or at 9 o'clock at night. And it's important that those people are available.
100%. Yeah, I mean, even if you can set some expectations too between the realtor and the lender as well. Like, hey, I've got a high school football game. I got to be at there.
Right.
My daughter's cheering, or whatever the case may be. But you still need to be able to get in touch with them, get back, and return the text message or a phone call as soon as possible.
Well, and let's talk about that too, because I think the pre-approval process is key. And if a client of mine, we want them pre-approved before we even go look at the house.
Sure.
And honestly, I mean, I know back in the
everybody
day,
should be doing that.
Right?
Everybody
Back
should
in
be
the
doing
day, they may not have done that, but today's world, you're going to fall in love. When you're not ready is the day you're going to fall in love with a house.
That's true.
Bottom line. And you can alleviate the headaches of the later calls or the weekends if you get that done in advance and know what you're doing there.
Yeah, we do pre-approvals. We don't
Right.
do pre-quals at all. I mean, and I have people regularly ask, okay, can I just pull credit? I'm like, no, that's not the way that we work. We want to collect, we take that full application, we pull credit, and then we have the borrowers provide their supporting documentation. It supports the application.
Right.
Otherwise, it's kind of shocking, really, how many people don't understand how much they actually make. And then is it gross? Is it net? Is it bonus income? Is it hourly? Is it differential pay? I mean, there's all these different classifications of income, and most people, frankly, don't really understand how they get paid. So how can you confidently give somebody a pre-approval or a pre-qual and say, hey, go put an offer on this house and go put 1% of that earnest money down? That's not responsible as a lender, in my opinion. And that's why here at the office, we do not allow that in any form or fashion. It is a full pre-approval. Now, I will say not every transaction gets underwritten prior to. We'll run what's called AUS, which I'm sure you're probably familiar with, which is an automated underwriting system if you're paying attention or familiar with the mortgage lending world. If we get an approval there, we may not necessarily have to submit it to underwriting to get a full underwritten pre-approval. It kind of depends on the scenario. If there's a questionable income situation or a questionable scenario, we will absolutely submit that to underwriting. But it doesn't happen overnight. Yeah, well, it can happen in 24 hours, but typically that's going to take a little bit more time to get that fully underwritten pre-approval.
Absolutely. And let's talk about why that's important from a real estate perspective, is because if I'm working with a buyer and we're going to submit an offer, that letter is far more powerful.
Right.
And I can have the conversation with the agent on the listing agent, that I'm confident that my client can buy this house.
Sure.
And that could help, especially if there's other offers. The other thing that listing agent may do is call you just to verify that.
Yep.
So again, the communication piece of how readily are you available to do that? And is that something that you do often, that you receive phone calls from real estate agents?
And not only do I receive them, I make them, because here's the deal. Like, we're not getting paid, you're not getting paid until that borrower gets to the closing table. And so if I can add one more layer of just being confident about the transaction by speaking to me over the phone all day long, I have no problems with that. Again, I've been doing this a long time, so there's nothing that I can't answer, and if there's something that I can't, I can get the answer to.
Right.
So, and if they understand that you and I are a team and we're working towards getting them paid as well, I think they're going to have a lot more confidence in accepting that offer. Yeah,
our goal is to get people in beautiful homes, right?
Sure.
It's most of the time, it's their biggest number one purchase, and
That's right.
It's a secure place for their families or for themselves or whatever the situation is. Roofing and homes are essential, and we're an important cog in that wheel, and yet every day we wake up with making zero. Like, we don't have a paycheck that comes in unless we get them to the closing table.
That's right.
But the satisfaction of that outweighs everything else we go through, and it's really important that it is a personal business. So I encourage people who are looking to buy a home that they find somebody that they feel comfortable working with, not just a computer generated experience.
Well, wait a minute. My cousin just got her license last week. She should be a perfect example of who I should use to go buy my next house.
Well, everybody's got to start somewhere.
That's true.
So, you know what? That's a valid point, because, I started in this business 5 years ago, and I had a corporate background that a lot of other people didn't have. So I transitioned very well into the industry. But it was tough at first. I'd go on some listing appointments, and why should I choose you? And I'm like, hell, I don't know. I don't know.
Well, why should they choose you?
Well, because you have your broker. Your broker's behind you, and you probably have a mentor. And I don't want to promote necessarily fake it till you make it kind of thing. But if you join the right brokerage with I love Remax Town and Country, and have always had that support behind me, that it really helped catapult my career. So I'm not going to tell you not to work with a new person, because you know what? They're eager.
They are.
They're eager.
And they're going to go that many
Yep.
times they're going to go that extra mile. It's the ones that I think get into it just for because they think it's easy. And I think anybody that got into real estate and thinks it's easy, I'm sure they were rudely awakened once they realized how much work goes into showing houses, putting offers, doing comps, you name it. There's a lot more time invested in than people think.
Yeah, just keeping up with the day-to-day technology. I mean, same with you. I mean, yesterday half the world was shut down because of the
Yes.
Amazon server not working, and you couldn't get into, your dot loop where a lot of our contracts are. A lot of stuff going on, right?
Yeah.
So you want an agent who can at least navigate technology a little bit.
That brings up an interesting point I hadn't thought about. So I still see some agents who print out their purchase contracts and write them in and then fax them or scan them and email them. I mean, so is there anything wrong with that?
I think you have to do it the way that your client feels best.
Okay.
But however, you need to keep track of that paper trail because
Sure.
that is a legal document.
Are you showing up to a closing package with a vanilla folder?
I am not. I am not. I have a very nice presentation that I can do in paper, or else I can do it on an iPad. That's kind of old school.
Yeah.
And there are people who still do it.
Sure.
But it's pretty, I think, on a listing appointment, if you have those things and they can sign right then and there, and then you send them that copy and boom, it's in their email and you're good to go.
Yeah.
Yeah, but that happens.
Yeah, it does.
Sure.
So we talked a lot about buyers, but you just mentioned listings. I mean,
Correct.
Walk us through what a listing presentation, I don't need all the details, but I mean, essentially kind of give us a general 10,000 foot overview of what a listing presentation looks for Miss Melissa.
Well, I think from a listing perspective, what we're seeing a lot now is, I think the number is that homes are on average 40 years old in the United States. But let's just take Cherokee County, and you may have Bridge Mill, for example, 20-year-old, 25-year-old homes that some of them have been updated, some of them haven't. So a lot of the listing presentations these days are going through, what do we need to do to get this house ready? Right. Because the buyers, they don't want your old stuff.
Right.
They don't want to pay the price you want for your 25-year-old HVAC system. It works, but that's not what they want.
Yeah.
And so we're having some difficult conversations with people about getting their home ready. But you can circle that back around, that if you do these things, this is your net. This is what you walk away with. And that's important because we're working with you to figure out what do those closing costs look like. And for a seller, it's minimal. But you also have to make sure that they understand the buyers are paying all this other stuff. It's very heavy on the buyer side.
Oh, there's no doubt about it. I mean, it's many transactions have been lost due to the buyers not able to cover closing costs or didn't have the fund. They had the funds for the down payment, but not for the closing costs, and couldn't get in a contract where the seller was paying for them. So, whether that was the right agent, I'm not sure, or just the sign of the times. Certainly now we're seeing a little bit more closing cost contributions. Obviously, I think everybody's kind of aware of that.
Right.
So we're definitely seeing more of that, and that's kind of circles back to the down payment assistance programs that are out there right now. There's lots of down payment assistance programs, especially locally. No matter where you're watching this from, locally you will have a down payment assistance. We're here in Georgia, and Georgia has the Georgia Dream, which is a great down payment assistance program. Now, as much as I love Georgia Dream,
it's keeping up with the qualifications, right? Because it changes so often.
It does. It changes quite a bit, and it does take a little bit extra time to get through. It's very paperwork or form heavy, so there's a lot of documentation that goes into those packages. So they tend to be a little bit longer transaction, but you can get below market interest rates. You can get down payment assistance for not only 3% on a conventional, 3.5% on an FHA, plus potentially some closing costs too, especially if the seller is contributing too. So there's some great options out there, and Well,
you just made me think too, from a lender side, when you're selling your home, getting those things ready are important from the standpoint of what shows up on the inspection, right?
Yeah, sure.
And what the lender needs to know versus not need to know, right? Because an underwriter could kick out what you're doing. So get the home ready is the message.
Yeah.
And I've even recently have done pre-inspections
That's my next
so
question.
that we could knock those things out, because it takes away that whole extra level of having to negotiate the price again.
Yeah, it's a little bit of an investment from the seller's standpoint, you know, to have that report, but also it gives them a clear understanding of what could or could not deter that deal or send it off the rails.
Yeah.
Interesting. I'm glad to hear that you're actually doing that.
Yeah.
That makes a lot of sense.
I would rather them do the pre-inspection over an appraisal, because that appraisal, can't be used by the buyer,
No.
right? And at the end of the day, the price, the value of the price is what the market is willing to bear.
That's
Not
true.
necessarily what you think or what the appraiser from the lender thinks even.
Sure.
So, yeah.
Yeah, what are you willing to pay for it ultimately?
Exactly.
Yeah.
Exactly.
Interesting.
So, yeah, good stuff.
What other pieces of advice can you give to buyers or even listings or sellers out there?
Don't wait. If you think it's the right time, I heard a great expression last week when I went to a conference, and a lot of us need to downsize. I'm one of those people, right? Both my kids have moved out. They both have their own homes now. I don't need 6 bedrooms and a full basement.
Right.
My 2 dogs do. I don't. However, it's about right sizing. And I love that term, and I'm going to really start using that when I'm meeting with people, because we all still have all our stuff, right? Yeah. And it's getting right in your life, and it's getting right with your home and getting rid of all that stuff. So right sizing is going to be my new catchphrase that I'm going to use quite a bit. And I just think that the longer people wait, the harder it is. You're either older, the physicality of it gets more stressful. You know, if you get the feeling you need to make a move, you need to talk to a real estate agent and see if we can't guide them. We were talking about on the buyer side, how much money it's cost buyers for sitting on the fence and not jumping into the game earlier. Saw a stat that if you had bought a home in 2022, I think it was, that you've lost out on possibly $67,000 worth of equity.
Waiting for that rate to drop back down to 5.5%.
Right.
So the cost of waiting is a real thing out there, and the analogy I think was, you know, they waited 2 years, spent, you know, $30,000 in rent.
Right.
The house appreciated X amount, and so when you net it all out, it was, you know, they lost out on about $67,000 or whatever that was.
Well, I think on the equity side, on the sellers, you know, to address that a little bit, there's more equity in homes than ever in the existence of real estate, period. Yep. And there are, you know, I can't quote that, but there are trillions of dollars, literally, that are sitting there. And you know, are we going to see a foreclosure every now and then?
Sure.
But we're not going to see a big crash in the market because of that. People are sitting in their homes longer. It used to be that they moved, like every 7 years? Now I think we're up to every 10 to 12 years.
Yeah, and that's all about the lock-in effect, right?
Yeah,
I mean,
nobody wants to give up that rate.
No, we know. We're well aware.
We're all aware. Yes, we all still need more inventory. And you know what? Let's face it. This has been the worst year in real estate.
It's been a struggle for sure. You know, with rates coming down a little bit over the last month and a half, you know, we've definitely seen an uptick in pre-approvals and purchase contracts.
Yeah.
Obviously, refinance business has picked up a little bit as well, but yeah, there's no doubt it's been a grind for a lot of folks. I mean, my team included, we've had, you know, as many as 10 loan officers, 12 loan officers. And now we're down to 6. You know what I mean? So a lot of the guys got out of the business entirely. Some, you know, took payouts and are trying to go in that big box route. You know, so yeah, it's been a little bit of a challenge, but here we are, still selling.
This is what I like to say. Closings happen every single day.
They do.
They just may not be mine or yours.
That's right.
And it's always the goal that to keep those happening, but that means that we're satisfying our clients and they're moving in the world. And this, speaking of moving though too, just outside of Cherokee County, and we have a ton of people that are moving to Cherokee County. Yep. Cherokee County and Forsyth County were tied for the highest growth in the state of Georgia. Mm-hmm. And I can tell you that I think I moved 3 or 4 families from Florida. Mm-hmm. I've had people from Colorado, Michigan, Tennessee, Florida. Yeah. I feel like I'm missing one. Massachusetts. Mm-hmm. And the Georgia economy is great. Yeah. So people are coming here for
we're definitely a net positive gain over the last several years, and continue to be as one of the top places in the country to move to.
So I have a question regarding your pre-approval and pre-qualifying. And so when you have these clients who call you in and you kind of take a look at that credit score and you go, yikes, we need to help these guys. What can we do?
All right, so I'm not a credit expert per se, right? I've been working in credit for over 20 years, and so I definitely have some understanding how it works and how to pay off certain debts, how to pay down certain debts. But as brokers, as direct lenders, as correspondent lenders, we typically have access to a couple different tools through the bureaus to determine, hey, if I run this scenario, what's my credit score? What's the likelihood of my credit score getting up above the threshold we need to get? So when it comes to certain, and then we can provide an entire plan if somebody needs to get their credit score up to either qualify or simply because maybe they want to take advantage of a little bit lower rate and a little bit of lower closing costs, and it's within reason. In other words, it's not going to cost tens of thousands of dollars. It's only going to cost $1,000, $1,500 to pay down some debt. So we can work with each individual to try to increase their credit score to help them, again, approve better closing costs, better interest rate. But when it's a more complicated, longer term, a lot of times we're going to refer that out to a credit repair expert.
Right.
And that's one of the things that, you're not charged to do that, right? So we don't charge any money to do that because, again, like we mentioned earlier, within reason, if we can get you up above that certain threshold to keep you approved, we all get paid, and you get to the closing table, they get to the closing table, I get to the closing table. So we don't charge for that service. I'm certain that, if you go to a credit repair expert, they're going to charge you, and it's usually 100 to 150, even more sometimes, depending upon the scenario. So it's all on a case-by-case basis. I like to tell people everybody has their own financial fingerprint. No one person is the same. And whether it's credit score, income, job, it's always going to be a little bit different. You have to be able to navigate, all the little different intricacies of each individual.
Right. That's awesome that's available, because I think a lot of people will go out and hire a credit repair company, and that's money that they could have been using to pay down that credit card.
Sure.
That just adds more to the debt if they're paying that out, because usually you have to lock in for a certain period of time on those things.
Yeah, it's got to be a pretty it's
got to be
significant
the right
scenario for them to do that. But I mean, I'm working with a borrower literally right this second, and it was kind of a bizarre situation, but we had to extend the financing contingency. This was not my original loan. Somebody dropped the ball, and I'm trying to salvage the transaction.
Save the day.
But I told the listing agent and our buyer's agent that I need some more time. I can't meet this contingency. Everybody was on board. We were able to extend the financing for another 7 days, and then in the meantime, I'm working on fixing their credit. The borrower has been phenomenal. Is getting everything we need to get done. He's making the payments, and here's the thing. I could get all this done and it still may not be approved. Yeah. But we have worked together as a team to protect that earnest money, because it's a substantial amount. I mean, it's $7,000. I mean, $7,000 is a lot of money to many, many folks, including everybody in this room, I'm sure. So throwing away $7,000 is not an option.
So we haven't talked about that with the earnest money side, but besides getting a client to the closing table, my number one job is to protect that earnest money,
Sure.
right? We don't want anybody losing that whatsoever. No. The other thing I see is not necessarily bad credit, but sometimes these people have no credit.
Yeah.
Like they've never had a car payment. They've never had a credit card. They believe cash is king. Mm-hmm. Well, cash is king until you need a loan.
Until you need to borrow.
Right? Until you need to borrow some. And so that's a process too, trying to get people to establish their credit.
It is. So, in something like that, you can use some self-reporting opportunities like your utilities, cell phone bills. You can utilize that, and you can show a 12-month history so we can then get you a credit score updated.
Right.
So there's a couple different little tricks of the trade to make those type of things happen. If somebody has no credit like that, pretty much right out of the rip, you're going FHA or maybe USDA, maybe VA, but it's going to be a government-backed loan for sure.
Right.
Just because of the lack of credit. So.
Sure.
And then even open up a small little credit card or a secured line at a bank, $500, that can really boost somebody's credit score pretty significantly in a short period of time.
Just going out and buying a tank of gas on that credit card and paying it 5 days later, you don't have to wait till the bill is done. But once it hits that cycle, then you're in pretty good shape.
Yeah, I'm never for just adding more debt to add more debt. But yeah, if you're trying to buy a house utilizing a mortgage, many times you got to have credit in some form or fashion. There are some no credit score transactions out there, but typically you're gonna pay a higher interest rate. You're gonna pay higher closing costs. So there's options for everybody. And that's the one thing that's nice. When we do start working together, you realize, because I'm a direct lender, a correspondent lender, and a broker. So there's literally nothing that we can't do right here. As you're right sizing, you choose Mortgage Right for the right product.
Oh,
you like that?
I like that. And we can do that in 27 states. Is that correct?
That's correct, yeah.
That's awesome. We do service, Blue Ridge and LJ up there too. So we have a lot of people who come in and out, and those are secondary homes, and that's a great market as well. You kind of threw out the alphabet there too with FHA and all these different loans. And one of the things that we discussed earlier was that you don't have to have 20% down.
No.
Right? And a lot of those different loans, you can have different amounts. And it's kind of, it's great if you have 20% down, but you don't necessarily have to.
No, you don't necessarily have to at all. And I think you shared a story, prior to us coming on here, where the mother was like, no, you've got to have it. You won't qualify or something along those lines. And, that's just not the case anymore. Mortgage insurance, has allowed for folks to put down as little as 3% on a conventional. FHA, of course, has their mortgage insurance, which is, going to be the same essentially all the way across the board unless you're putting more than 5% down.
Right.
But it's allowing you to put less than 20% down and to get you into the game. And those folks that utilize the mortgage insurance over the last 10 years, number one, they're going to be able to eliminate or remove that mortgage insurance. And I'm not talking FHA, I'm talking conventional, traditional private mortgage insurance. They can eliminate that mortgage insurance by requesting an appraisal to be done through their MI department, and they don't have to wait a certain period of time.
Right.
Okay. When you call your servicer, this is a great way. If you're looking to save some money and you've been paying mortgage insurance, if you call your servicer and you ask to speak with the mortgage insurance department, have an appraisal done. If the equity is there, 20% or more, they'll eliminate that payment, and you could be paying $150, $200 a month just in mortgage insurance. And that's a great way to increase your monthly cash flow without having to go through a refinance process, without having to spend a bunch of money. A couple $100 for an appraisal, sure.
Yeah. But
the benefit outweighs the investment significantly.
It's a great opportunity to reach out to your realtor who could run some comps. It's not the appraisal itself, but could at least give you an idea. You're close or not close. Don't waste doing that yet, but you're getting close. But like you said, the past 10 years, we were at 10% appreciation for a really long time. Yeah. And, now the forecast is, probably about 3% for the next couple years. But if you go on out, they're looking at 5%. So before long, you could easily get rid of that PMI or your mortgage insurance.
Yeah,
for
that's a great idea. Well, Melissa, where can everybody reach you?
I can be reached at 678-535-8979, or you can also go to the melissabailey.group.com. There's great information on our website. My office is in Canton, right next to Publix up there, off of 6th Road, and we're always available. I did start a team this year, so I have two other agents. Yeah, two other agents that work for me, so we're super excited and looking forward to 2026 for sure.
I'll be certain to get all of your information. We'll put it in the description below, so if you want to contact Melissa and the Remax team, you'll have her contact information. And certainly, as you're making those mortgage decisions, don't hesitate to reach out to the Darin Hunter team right here in downtown Woodstock. And Melissa, what a pleasure. Thank you so much.
It's been great. I enjoyed it.
Yeah, really did enjoy that a lot. And that, I don't know if you've ever heard this before, but did you know that this entire episode was guaranteed?